What's going on, guys? It's L&J Financial back at it again, week number 4. This is Lucas.
And Julian.
And we are coming at you with the purpose to inspire, enlighten, and entertain the younger generation about stocks, finance, and mindsets of the successful. Julian, how you feeling right now, bro?
Feeling great. Feeling
good? I mean,
How are you?
I'm pretty good, bro. I'm pretty good. I'm fired up. I'm amped up. We're in a new space right now, a new office space, kind of leveling ourselves up on this podcast, bringing you guys even better quality than we did before. So a little bit of an adjustment compared to my room.
Yep. Yeah, we're in a new space. We're actually got our own little office going for this segment today. So I'm very excited and
hopefully future segments. Yeah. So first things first. Last week, kind of a down week. First time in a little while. Compared to like a huge record high 30,000 on the Dow last month. I mean, last week was a little bit of a correction week. It wasn't a super down week, but it was down ended up being down about 1%, 2% overall. But yeah, Julian, what are your thoughts on why it went down?
Well, just increase in coronavirus cases. There's new lockdowns happening in California. I think in Canada too now. But there's some new worries about COVID going around. So it was expected. I think I mentioned in the last episode that I was expecting a minor pullback in the overall market. But not too bad. There's still a lot of upside coming this week, I think, with some vaccine news coming out.
Yeah. So, I think just given this market, like we see that like it just runs up and then it corrects a little bit and then it just runs up even more again because people, it's oversold, even though it's not oversold. People think it's oversold in the short run and then they just run it up even more. That's what's kind of creating this, I guess, a little bit more of a bubble, more or less, to speak of this market. But it's kind of just that consumer sentiment towards the coronavirus, rising infections, hitting record highs every single day. It seems like we're hitting new highs. But, I think people don't really give a fuck. I think that's kind of what's going on right now. People should give a fuck about the virus, but I think it's more people going, I'm going to do what I can, but the vaccine is coming. That's the big thing. This vaccine's coming. It's coming fast. People are already getting vaccinated. I think it's what were they saying? It's the first responders first and stuff like that? Or what was it?
I think the medical community will get their first vaccine.
Yeah, it's the medical essential workers are getting it first. And then the people of extremely high risk and living in, what's it called again, like old folks' homes and whatnot. So good news. Those communities are getting what they need for this virus first. But that kind of goes right into your next point. The first people that were hit were the cruise lines. Yes. In March, Julian.
The travel industry.
What are your thoughts on the travel industry kind of going forward now?
I still think the travel industry is if you are a long-term investor, looking at all the travel companies, Delta, Carnival Cruise, all the cruise lines and airline stocks specifically, because they're right now still haven't even recovered from their initial hit they took when the first fear of COVID came. And but with vaccine news coming out, this is what we're going to be talking about on how if you are looking to enter some day trades on these travel stocks, that this next week could be the week for you.
And drop some names of examples for listeners who don't really know certain travel companies. Like, what are some stocks that you like, high volume stocks?
Yeah, so I really like Delta Airlines.
Delta Airlines
is probably my favorite airline stock, but there's so many different ones. You got Norwegian Cruise Line, you got Carnival Cruise Line. We've got all these companies that got hit super hard by COVID, and right when there's talk about a vaccine coming out and there's hope for a possible solution to this major pandemic, we see a big run up in these travel companies. And
they're still beaten down. They're still a beaten down dog. I'm telling you, like, people think, we went through one of the biggest bull markets and the shortest like recessions in history. But these companies are still undervalued, extremely, extremely undervalued, and for a good reason, because they haven't, the cruise lines can't really operate like they used to. Airlines are down, 75% for the year on traffic, given this virus. But, that kind of goes into our next point, which is the 2021 market and what that kind of looks like. I'm very optimistic. I'm an optimistic guy. You guys are going to kind of expect that from me from the future. I think both of us are optimistic for the future all the time, but I think we're looking at another terrific year for stocks, at least. Another terrific year given the vaccine and people. You look at how good the market did during a pandemic. Now imagine when there's even less of a pandemic. how good is that going to look? Julian, do you think this can continue?
Oh yeah, I think we'll recover fully from we've already seen, most companies have already surpassed their all-time highs than when they were at before COVID hit. So that's what I'm talking about, how, our market that we're in a very bullish market, and we're very optimistic in our industries that we are investing in. And really the only companies that haven't fully recovered from the COVID virus is the travel companies.
And I think that's where the buy is right now. At least now, I think if you buy any time within the next month and a half, 2 months, it's
hands down for long term. If you are going to buy into any of these travel companies like Delta, like Carnival Cruise, like United, you're going to have a great position if you don't look at that in years to come.
Yeah, and that's going to be one of the best sectors in 2021. I think the best recovery sectors, because obviously everyone can go, tech. Well, I mean, obviously tech's going to do great, but I think what's going to be interesting is seeing tech companies like Zoom. How are they going to? They're killing it every fucking quarter right now. They're having better earnings than before because rising infections. They're kind of like they go with COVID. When COVID goes up, yes. Zoom goes up. When COVID goes up, Amazon goes up. Oh, people are going to stay inside. Same thing with Netflix. Same thing with any streaming service. But it's going to be interesting to see those same companies when the infections start going down. Are those companies? How are they going to maintain the same amount of earnings? It's going to be interesting seeing how Zoom is going to stay in the overall marketplace. I think they're going to stay because of a lot of companies are figuring out, wow, John Doe, he can work from home for the rest of his time at the company. So I think Zoom is still going to be existent. But, you have to ask how long, how long, are their earnings going to stay this way? We're going to have to get a plateau. And that's kind of goes in right to our next point, which is markets in 2021. Julian was already speaking about the travel industry. Companies like the travel industry is already going to be getting better. I mean, obviously travel sanctions on countries are going to lift up as more and more people get vaccinated, meaning travel will go back up, airlines will go back up, cruise lines will go back up. Cruise lines probably are going to be one of the last because they're like a petri dish for infection. I mean, you step foot in one of those things, it's like instant infection, for now at least. But those things will get better in terms of 2021 market. I also was talking about EV market, which is the electric vehicle market. Julian, you love this market, man.
Oh, yeah.
You do.
I see that. I think that the electric vehicle market has huge growth potential in 2021. Already one extreme catalyst for that would be the Biden administration. Their backbone of their policies that they've been trying to get done is making the EV market a affordable, universal thing for people to be able to afford and buy. So more companies like NIO and more companies like Workhorse that are coming out trying to break into that mainstream electric vehicle market and challenge Tesla. I think that they have a lot of potential because right now it's only Tesla, and there's so much more room for people to come in and make an impact.
It's such an untapped market, and that's what's kind of creating these run-ups like NIO, Switchback Energy Corp. You talked about that company last week as your pick. We'll talk about how their picks did last week and whatnot. But what I was saying is these EV markets are blowing up because of people's interest in them. Now, these companies need to prove that they can make money. They need to prove that they have a good foundation. That takes with time. Tesla is proving that, but they're only the first to it. Doesn't mean they're the last to it. This is only the beginning. It's like the first company, the first railroad companies, the first oil companies.
It's the very beginning.
It's the very beginning of a whole new industry, and I think that's what we're talking about. And if we want to talk about 2021 sentiment, 2021 outlook, that's where we're headed. That's the big idea. Also, we can talk about space. Space exploration companies, SpaceX. What's Blue Origin? Blue Origin? Is that Jeff Bezos? I think that is. Correct me if I'm wrong. If he has I think it's Blue Origin.
Not quite sure. Probably.
That's his space exploration company. But point is, those are a lot of industries I think we're going to be seeing a lot of new growth and a lot of new news coming out of in 2021. But yeah, that gets us into our next topic, and I want to talk about Tech to Texas. Sure, I don't know if anyone here is listening or follows any of the news. CNBC, doesn't matter. Point is, Elon Musk is in Texas now. And what does that really mean? That means, well, first off, we all know Elon. He's been kind of like talking shit on California for a while. I mean, he didn't give a rat's ass about operating Tesla during a pandemic. His employees were kind of upset about it. But you got to respect this guy. He's a visionary. And Hewlett-Packard, a huge computer company, has been in Texas. A lot of other tech companies are going to Texas now, just given the lower income taxes lower property taxes. But eventually, those taxes will only raise as more companies fled there. But in the meantime, it's a terrific place for startups. Same thing with Arizona, but more with Texas because there's already a huge demand. Jobs are out there. I mean, plenty of people are fleeing California right now. It's a huge thing. It started with Californians going to Idaho. Idaho doesn't want us for shit. Now it was Texas, given the tech sector, and that's where the jobs are getting created. Also, Oracle, huge company, Oracle. You might know them as the arena that has the Golden State Warriors. Oracle Arena, Oracle, the company, has moved their headquarters to Texas now. Even more jobs. We're seeing this huge transition. So get ready. If you're in the real estate market, if you're looking into the real estate market anywhere, look at Texas. I don't follow it specifically. My mother's a real estate agent, so all I do is hear about properties, values, and whatnot every single day of my life. But look into that. And I'm talking about Texas. I mean, Texas is a huge industry growing on the demand because I think Silicon Valley is getting oversaturated. California as a whole is oversaturated. SoCal, so that's kind of what we wanted to talk about in terms of tech. Any thoughts on that, Julian? You got any raw thoughts, commentary?
Yeah, I think if you're really looking for a tech job, you're a guy looking to make some money, I think Texas might be the place to be. Yeah.
Also, if you're interested in real estate, like I said, I mean that's a huge potential investment is properties within Texas, around especially Austin and San Antonio and Houston. I mean, those are going to be hubs. More to come on that. But yeah, that kind of transitions into our next topic. We want to talk about our picks for next week.
The best part.
This is what you guys want to hear. This is what's going to make you the bing, the cha-ching.
We're going to give you the golden advice on what to invest in this
guaranteed week. To give you a Lamborghini.
No, just kidding.
I'm just kidding. No, again, we like to say we are not financial advisors. We do not manage your dad's 401k.
This is entertainment.
This is entertainment. I hope you guys are entertained. But also, we like giving you guys recommendations and what we're doing. And these are always companies, more or less, that we have money in.
Yeah, we're doing this.
We're doing this too. And, we're not saying we're perfect. We're not saying everything we pick, we have the golden Midas touch of Warren Buffett. But what we are saying is that we have money in it too. And we will not be pitching and selling you guys shit that we ourselves are not in. Mm-hmm. So, Julian.
Yeah.
What's your company? What's your pick for the week?
This week, my biggest pick, I'm really going to be looking at the travel sector and how they react to the vaccine news. Like I said, nothing's guaranteed in the market. So, what happens in the past tends to repeat itself, but it doesn't always have to. So, I'm going to be watching specifically Delta Airlines, ticker symbol DAL.
DAL, ticker Delta Airlines.
Yes. And, they're still oversold from their all-time highs of $63 before COVID hit, and they've been just recovering very nicely, slowly with vaccine news. If I'm being specific, so that's why I'm following Delta Airlines for this week because I'm pretty sure that they're rolling out vaccines to people on Monday, tomorrow morning.
Wow.
And, so that's the first time that's ever happened in vaccine news history.
Also, I want to point out I have their chart.
COVID.
I have their chart up right now to go along with Julian's point. I mean, their debt to asset ratio is increasing, but the thing is, their assets are increasing with their debt, which is can sometimes be a red flag for a value investor, anyone investing long term. But what it does mean is their assets are going up, so they're obviously having money to buy assets. Their cash flow is still looking somewhat dwindling, but the thing is, these guys are getting buyouts, they're getting stimulus, and I don't see air travel going away. That's the thing; they're not going away.
No, yeah. So I'm very curious to see how much that this industry is going to run up this week, or even if it does at all, because we're still fighting this at the same time of vaccine news coming out. We're getting these new lockdowns and more cases at the same time. So I'm going to be watching it. I won't make a position until I see something that confirms an entry point for me, and I'm going to get out where I like to. I don't see Delta Airlines recovering all the way back to $60 in the next week. That's not what I'm saying at all. I'm saying I'm just looking for a midweek swing play on this on this catalyst, which is the vaccine.
Also, it's a terrific hold. It's a terrific hold position. I mean, we look back at what happened in January, trading at $60 a share. COVID hits, people are scared, shitting their pants because of this virus, right? Which they should. And it went down to about $17 a share at a low. And it's been continuously increasing for the past 7 months, up to $41. That's a terrific growth play. Long-term value investment right there. Delta Air is a good company. It's going to take a little bit longer to get back to where we are, but it's still a terrific hold. So, Julian, I think that's a really good point that you're making.
Long-term or short-term, something to keep in mind, something to add to your watch list. for this week.
And the good news is, Julian, let's talk about volume in companies, like volume, right? Like this is 12 million, meaning that's on average how much is getting bought and sold.
Yeah.
And talk about volume. What does that mean?
Volume, yeah, that's something you really want to actually look at. I don't trade any stocks really that have under $1 million in volume. Because it means that it's going to be harder to make trades throughout the day. Now, if you were a long-term investor, it's not that big of a deal, especially if you have a bullish outlook on a specific company. But the volume is crucial. At 12 million, Delta Airlines is a very popular traded stock, and it's something to add to your watch list and see how it does next week with this vaccine catalyst.
Yeah, especially for you guys that are interested in day trading or swing trading or just trading in the short run, volume is very important, because if it's getting traded very frequently, bought and sold within the milliseconds, right, or seconds, usually that's from anywhere from, I trade stocks, if I'm going to swing trade it, I make sure to look at companies, obviously with other indicators, but 750,000 and above, because sometimes if it's a very low amount of volume traded stock, you can't sell your shares immediately at the recommended price. But most stocks now that are above that, you can immediately, when you click sell, it'll sell. So always look for the volume if you're interested in swing trading and day trading, because that'll give you a good insight as to if people are trading it as well. So that's, again, DAL, Julian, right? Delta Airlines, yes, for this week. Good outlook. Now my pick, we're going to transition right over to Jumia. The ticker is JMIA. If I butchered that name of the company, I'm sorry. It is an African e-commerce company. I am very, very excited for this company. They have, they went from, I gotta pull up my notes really quick. They're an African e-commerce company. Actually Nigerian, but in Africa. And they have look at Africa. They have a population of 1.2 billion people. That's a seventh, eighth of the world. That's untapped. Amazon can't even get to a lot of these places in Africa. Yeah. You think about Amazon, think about the logistics of in Africa. You think of the landscape where these neighborhoods are. It's very hard to reach. But this is what this company is planning to do. This week they had an insane amount of volume being traded. They went from, let me pull up my notes really quick. I have everything on this company. So Jumia. So they're trading at $38.13 a share. They ran up from 31 to 38 last week. It had a record amount of volume in 1 week. They ran up from $14 to $38 just in the month from November 10th to December 10th. Just in a month, they went up almost 200%, 300% of the year. But they have negative earnings for the first 9 months of 2020. It's the first time they're recording somewhat positive earnings. But I think it's important to look at a company from a long perspective. This is not a company that you're going to get rich off of quick. It's still somewhat of a larger buy-in, $38. Not everyone can buy. You can't buy 100 shares of it immediately if you are not trading with a lot of money. But for investors that are listening to this, people that want to invest in a company with a huge, long run horizon, I love this company. I just bought them on Thursday, and I think they have a lot of potential because they can become a subsidiary of an Amazon in Africa. Africa's an untapped market, and they're still a developing country. But I truly believe with the right improvements, this can be a huge market. And it's if they add more customers, they increase the transaction frequency, and they narrow losses with better margins, it's going to be a good company. What that means is that they add more customers, right? Because they need more people to be buying from the shop, and they're becoming a third-party company. So Jumia used to just sell stuff exclusively that they made on their website, but what they're going to become is an Amazon. It's like a third party. People like
an Alibaba.
Like an Alibaba. If Julian wants to sell hats, right, on Jumia, he can sell hats. If I want to sell exclusive pottery, I can sell that. So that's huge. That allows them to have more people on there. That means more customers. And they need to increase the transaction frequency. What I mean by that is they need to increase the amount of times people are buying on that website, and that will create the revenues. And that'll narrow their losses, really. And they can narrow their losses with better margins, meaning if they're a third-party website, all they're doing is providing a platform for people to sell, which is exactly what Amazon's doing. And again, the name of the company is Jumia. It's spelled Jumia. Ticker's JMIA.
Yeah, I think Jumia is actually, it's gonna. I truly think that company is gonna triple in the years to come. And I just wanted to point out, I read this recently looking into Jumia that Africa is projected to have the fastest growing population in the entire world between now and 2050.
Jeez.
So that's just a huge statistic for an e-commerce platform to have behind their back, you know?
Yeah.
You know, what they need is just more people to use it and become a marketplace as a middleman company to really break into that Amazon, Alibaba type company.
Great points there, Julian. Yeah, no, this is, and you know, obviously hedge funds aren't always right, but I've researched Jumia. They have an increase in the amount of hedge funds holding the company within the past month. So, you know, obviously if the big money's moving in, you know, big money has the power, big money has the analysts, big money understands kind of where the money's going to go. So just basing it off of their movements, you can kind of look at there's some money going into Jumia that can explain the increase in volume. The volume went from an average of 10 million now up to almost 18.5 million, which is rounded up to 20 million in terms of the volume. It doubled in volume within the past month. So there's obviously interest here. Again, if you look at the key stats of this company, it's negative earnings. Their PE is negative. So in the short run, you know, they're not cash generative. But in the long run, they're going to be significantly cash generative. But again, that's a recommendation. I can't guarantee that. For all I know, it's going to be at $0 a share in 6 months. I just lost all my money. But I'm very unlikely that happens. But it can happen. But we just want to give really good recommendations in companies that we believe in and that we're looking for, and to help you guys really in your research. Because I know our recommendations we give on here aren't just fresh. We get them from other people too. You know, like we watch other people on websites. I get my stuff from Kramer on CNBC. I get a lot of my stuff from Zip Trader. Shout out to Zip Trader if you ever listens to this. He's a great guy on stocks.
One of the best.
Motley Fool is a terrific Seeking Alpha. These are all articles at companies.
Jason Capital.
Jason Capital on TikTok. No, he's not that guy. He's a G. But no, point is,
shout out to Jason.
Shout out to Jason Capital. But we're getting a lot of our stuff from other third parties and whatnot, and through our own research, and to kind of give you guys a condensed view of what we're looking at, so we can help you in your ventures and help you and hopefully grow your investments. But do you want to add anything, Julian?
That's just why we're here. Thanks for tuning in again for our 4th episode of doing this.
Yeah, and now we're officially on Spotify, Apple Music, soon to be on Google Podcasts, obviously uploading to YouTube as well. So we're trying to get as many platforms as possible. We're keeping this weekly. We're keeping you guys the best content. And always, if you're listening to this, just reach back to us on our Instagrams. My Instagram is @LucasRoland. Julian, what's your Instagram?
Julian McHale.
Julian McHale. So if you find it, type us in, shoot us a DM. Let us know how we're doing, how we can be better. We're just starting out, and we really want to get better, and we want to give you guys the best service we can provide. So always let us know what we can do.
Yeah, and let us know. Leave us a review if that's an option on the podcast. However you're listening to this, if you can comment or say anything, we want to hear at least one person to come back and say something and see if they like what we have to say. So if there's a way to comment on what you're listening to this on, go ahead and let us know what you think, because we haven't heard anything yet.
It's been crickets right now. We don't know if we're just talking out of our ass, so we want to make sure we can give you guys the best we can give you. But anyways, that wraps up this episode. Week number 4 of L&J Financial. This is Lucas signing off.
It's been Julian.
Thank you guys so much. Take care.